And I think you have to kind of take a step back and see what the biggest players in the world are doing. And the biggest players are the central banks who are massively de-dollarizing and buying commodities. And I think that's kind of the thrust that fits hand in glove with Zoltan Pozsar said. We are heading into a new era based on commodities and transparency, not opaque debt instruments and promises that seem to fall short. And I just think that this is something that will be a very, very...
You're watching Silver News Daily. Like this video and subscribe to the channel for the best news that you don't want to miss. Now let's get straight to it.
Imagine a world where the very foundation of wealth shifts beneath our feet, where the overlooked becomes the overlord of the investment realm. This isn't just a speculation, it's the unfolding reality as we witness the stock market's leadership narrowing to a razor's edge, led by tech giants like NVIDIA. Amidst bubble-like tremors and the chase for safe havens, there lies a silent guardian, a metal that has been biding its time, ready to redefine wealth and security. Welcome to the dawn of silver's era, an undervalued gem poised for an unprecedented rise. Stay tuned as we unravel how the smart money is quietly stacking up on silver, potentially retiring those wise to its call. Are you ready to see the unseen, to uncover the potential that could shift the tides of fortune in your favor? Let's dive into the world of silver, the unsung hero of the financial markets, and discover how it's set to outshine even the brightest stars.
The reason I say it's important to look at the four asset categories, as I just explained, what happens to the stock market now is very important to gold, and vice versa. So, if you're not in the stock market, you should be looking at it anyway, because as it wobbles, gold's going to take the cue that, okay, this asset class shift is underway again, and we know what the Fed's going to do. Gold knows what the Fed's going to do, and the ECB and the BOJ and all the other major central banks. You start to wobble their stock markets, break their bubbles, and start to get data points that follow that event. They've got the excuse to go back the other way. And I know they're waiting for it, probably eagerly hoping for it. Actually, you listen to Powell, he kind of thinks that's good. So looking at all four asset categories is important because they impact each other.
As we peel back the layers of today's financial markets, a startling picture emerges. The stock market, a traditional powerhouse of wealth generation, is showing signs of strain, with its fate increasingly tied to a handful of tech behemoths. This narrow leadership, exemplified by companies like NVIDIA, is ringing alarm bells for astute asset managers and investors alike. But why, you may ask, does this matter to you? Because, my friends, it signals a market teetering on the edge of volatility, searching for a safe harbor. Now let's turn our gaze to precious metals, traditionally the bastions of security in times of market unrest. Among these, gold has always been the star, its luster capturing investors' imaginations and wallets. Yet there's another player, often overshadowed yet equally potent in its promise: silver. Silver, with its rich history as both currency and commodity, stands at the crossroads of value and versatility. Its journey through the ages as a store of wealth and a key industrial component is not just a tale of past glories, but a beacon for future fortunes. In today's volatile economic climate, marked by geopolitical tensions and the specter of inflation, investors are on a relentless quest for assets that offer not just safety but also tangible utility. Silver, distinguished by its dual role as a precious metal and an industrial dynamo, is uniquely positioned to answer this call. Consider for a moment its indispensable role in modern technology and manufacturing, powering electric vehicles, enabling solar energy, enhancing medical devices. Silver's conductivity, reflectivity, and antimicrobial properties make it a linchpin in our march towards a sustainable and technologically advanced future. But here's the crux of the matter: despite silver's widespread use in critical industrial demand, its supply is finite and faltering. The mining output is dwindling and recycling rates cannot keep pace with consumption. This gap between supply and demand is not just a temporary imbalance, but a clarion call for those looking to the horizon, anticipating where the next wave of investment growth will emerge. History offers us valuable lessons here. During periods of economic turmoil, precious metals like silver have soared as investors sought refuge from the stormy seas of market volatility. The stagflation of the 1970s, for example, saw silver not just surviving but thriving, its value skyrocketing as it provided a safe haven for wealth. Fast forward to today, and the conditions are ripe for a similar surge. The gold-silver ratio, a barometer of silver's relative value to gold, is signaling that silver is undervalued, perhaps significantly so. This discrepancy isn't just a statistical curiosity, it's a siren song for those looking to diversify their portfolios with assets that offer growth, security, and resilience. As we continue this journey, we'll delve deeper into the compelling case for silver. We'll explore its technical resilience, its strategic position in the global economy, and the shifting sands of investor sentiment that are slowly but surely turning in its favor. And yes, amidst this exploration, we'll also pause to reflect, to question, and to engage with you, our viewers. What are your thoughts on silver's potential? Are you considering it as a cornerstone of your investment strategy? The story of silver is unfolding before our very eyes, a narrative of opportunity, challenge, and untapped potential. As we navigate these complex times, the wisdom of looking beyond the conventional, of seeking value in the overlooked, has never been more pertinent. Silver, with its shimmering promise, invites us to reimagine the landscape of investment, to consider how the undervalued can become the unassailable.
It's a start of a rollover again, which might also be coincident with a rollover in the stock market, because it's been behaving in sync. So that could help gold. But I have to caution again that yes, sometimes there's some intermediate times where you can look at gold and look at the dollar and see their inverse. But put this in your mind. If you waited on the dollar index to tell you to buy gold, okay, here's what you've got since December of 2015, gold was at 1,050, okay, bare low. December 2015, the dollar index was around 98. Okay. Since then, the dollar index right now, how many years later? Okay, 2015, 2024, it's 103 something. So 3, 4, 5. It's up 5 or so percent. And it's been either side of that 98 price level, by the way, in the years since. So it's been up and down. But right now, we're only about 5% higher than we were at the end of 2015 when gold made its low. Gold is double where it was at the 2015 low. So using that correlation between the dollar and gold is not a great idea. I think it will help gold when the dollar does break, especially if it goes down another, let's say, 4 or 5%. It's really going to fall apart. At that point, it'll no doubt help gold. But it's not an essential. Gold's demonstrated that.
As we navigate the intricate dance of markets and metals, a pivotal moment has arrived, one that beckons a closer examination of silver's unique allure. Let's dissect the layers, shall we? At the heart of silver's story is a compelling dynamic of supply and demand. This isn't merely about how much silver is pulled from the earth or recycled. It's about understanding the profound impact of its industrial applications. From the realms of renewable energy to the frontiers of medical technology, silver's role is both irreplaceable and expanding. Yet, as demand burgeons, the supply narrative is tinged with caution. The finite nature of silver, coupled with a decline in mining output and modest recycling efforts, paints a picture of scarcity amidst abundance. But why does this matter? Because in the world of investing, scarcity coupled with increasing demand is a formula for value growth. It's economics 101, yet with a twist that only the nuanced and multifaceted world of precious metals can offer. As we pivot towards a green and tech-driven future, the industrial thirst for silver is projected to surge, potentially outstripping supply and sparking a price revolution. Yet the story doesn't end here. The economic landscape, ever a canvas of complexity, offers additional hues to silver's bullish narrative. Consider the tumultuous dance of inflation and geopolitical unrest, a duo that historically sends investors flocking to the safety of precious metals. Silver, with its dual appeal as both an investment haven and industrial staple, stands to benefit twofold. The echoes of the 1970s stagflation, where silver prices reached astronomical heights, serve as a powerful reminder of its capacity to act as a hedge against economic uncertainty. Furthermore, the evolving narrative of the gold-silver ratio offers a compelling subplot. This metric, while not an oracle, provides insights into the relative undervaluation of silver compared to gold. Historically, deviations from the mean have heralded periods of adjustment, where silver's price has rallied to restore balance. The current high ratio suggests that silver is undervalued, hinting at a potential recalibration that could see its value soar. But as we chart this course, it's crucial to anchor our journey in the present. The technical analysis of silver markets reveals a resilience and readiness for growth. The steadfast support at the $22 level, a testament to silver's undervalued status, suggests a springboard for future rallies. As traders and investors alike recognize the value lying in wait, the stage is set for strategic acquisitions, with a buy-on-dip approach emerging as a wise maneuver in the playbook of the patient investor. Yet, amidst this analytical voyage, one must not overlook the broader shifts in investor sentiment and market dynamics. The narrow leadership of the stock market, marked by an over-reliance on a few tech giants, has raised alarm bells. The quest for diversification and safety has led discerning investors to look beyond traditional stocks, seeking refuge and potential in the precious metals sector. Silver, with its unique proposition and untapped potential, is increasingly catching the eye of those looking to hedge against market volatility and inflationary pressures. As we approach the apex of our exploration, the converging paths of economic indicators, market sentiment, and silver's intrinsic value suggest a looming renaissance for this undervalued metal. The anticipation builds not just for the potential financial gains, but for the broader implications of a shift towards assets that offer both stability and growth potential in an uncertain world. As we ponder this impending shift, a question arises, beckoning engagement and reflection. How do you view silver's role in the current economic climate? Is it merely a hedge, an industrial necessity, or could it be the cornerstone of a new era of investment strategy?
Evidence, because gold is an anticipatory market. It doesn't normally make its moves based on a hard piece of data, for example. You might see an hourly or daily action based on disappointment or happiness to do a data point. But the big trend structures in gold tend to break without any headlines in anticipation of likely headlines to come. Gold's a smart market. And I would say right now, you get back over 2,100 gold, you're gone. Silver back over 2,350 again is going to look good. Right now, we're just below 23. There's some big triggers on silver as well that say launch time. And by launch time, I mean where you go up in geometric fashion, like we did in the spring and summer of 2020. Silver went from under $20 to 30 in about 6 months. So percent-wise, I think the real liftoff point for silver is just above 25. And we get very specific in our reports. We update the numbers and if they change. But both those metals are poised for a shift out of incremental bull trend into something that chaos theory people would enjoy. Rapid ascent. Break all the models of how you've behaved for the last few years and start to go vertical. And I think that probably will be partly an effect of asset managers saying, I knew this thing would break. I'm getting out of the stock market to some extent, and I'm moving that money somewhere else. And one of the good areas to me looks like gold because it's behaving well and the miners are undervalued. And I think that's where you'll get the goose in the monetary metals.
In the grand tapestry of financial history, silver threads its way through the fabric of economies and empires, bearing witness to its immutable value across millennia. Yet, to understand the full breadth of silver's potential, we must journey back to its roots, exploring how its dual role as a monetary and industrial asset has cemented its place in the annals of economic lore. Silver's narrative is not just a relic of the past, it's a beacon for the future, illuminating the path for those astute enough to recognize its enduring worth. The historical significance of silver cannot be overstated. From ancient civilizations to the modern era, silver has been a cornerstone of commerce, a symbol of wealth, and a tool for trade. Its allure, derived from both its beauty and utility, has captivated societies, underscoring its role as a stabilizing force in tumultuous economic times. The lessons of history are clear. When faced with inflationary pressures, geopolitical tensions, and financial instability, humanity has consistently turned to silver as a bastion of security and prosperity. Fast forward to the present, and we find ourselves at a critical juncture, where the lessons of the past intersect with the challenges of the future. The global economy, characterized by its volatility and uncertainty, has reignited interest in precious metals, with silver poised at the forefront of this resurgence. The reasons are manifold, but at their core, they reflect a collective yearning for assets that offer not just safety, but also the promise of growth. The industrial demand for silver, a pivotal driver of its value, has entered a new phase of expansion. As we embark on the green revolution, with a heightened focus on renewable energy, electric vehicles, and sustainable technologies, silver's role has never been more critical. Its unparalleled electrical conductivity, thermal conductivity, and reflective properties make it indispensable to the innovations that will shape our future. This burgeoning demand, set against the backdrop of constrained supply, presents a compelling case for silver's upward trajectory. Moreover, the investment landscape is witnessing a paradigm shift, with investors increasingly attuned to the merits of diversification and the search for assets that can withstand the vicissitudes of market cycles. Silver, with its historic resilience and speculative appeal, offers a unique proposition. Its ability to outperform in bull markets, as evidenced by past surges in value, underscores its potential as a lever for portfolio growth and a hedge against inflation. As we consider silver's journey, we must also turn our attention to the broader economic indicators that underscore its relevance in today's world. The gold-silver ratio, a critical metric for assessing silver's relative value, hints at a rebalancing on the horizon. With silver currently undervalued by historical standards, the stage is set for a recalibration that could see its price ascend to new heights. This isn't mere speculation. It's a strategic insight grounded in the cyclical nature of markets and the enduring principles of supply and demand. In this complex mosaic of economic forces, silver emerges as a linchpin, a metal that bridges the past with the future, the tangible with the speculative. Its story is a testament to the savvy investor's quest for assets that not only preserve wealth, but also propel it forward. As we navigate the uncertain waters of the global economy, silver stands as a lighthouse, guiding us towards a horizon brimming with potential. The narrative of silver is far from complete. It's a story still being written by the forces of innovation, market dynamics, and investor sentiment. As we ponder the unfolding chapters, a question looms large. How will you position yourself in the saga of silver's ascent? Will you be a passive observer, or will you seize the opportunity
remember,
to be
the
part of
dollar
a
index
historic
was at
shift in the
115
landscape of
back
investment?
in late 2022. That was when the bond market made a low. I mean, yields were high, okay, and that helped promote the dollar, okay, relative to other currencies. So the dollar was at $115 index. Now remember, the dollar index is about 70% comprised of the euro and the yen, okay? So it's really almost an inverse of the euro, which I think is like 56% or something of the dollar index. But then you collapse from the 2015 high in the dollar all the way down around the 100 level. I think 101 had been the low back then in early 2023. Well, at that same time, bonds rallied, so did gold. Okay. Now, bonds went down and made a new low in price October of this past year. So a year after that, October 22, new low. Now, if the dollar had fully reflected the rise in rates here, when bonds went down and took out the price low in 2023 of the 2022 low, then dollar index should have been back at 115, right? No. The highest it ever saw in that rally last year was 107. Then it puked back down again toward 100 again. Right now we had a rally up to 104. But right now, if we close the week out where we are now, below 104 on the dollar index, we're going to break its weekly momentum. Now, that's not a great big giant metric, but it's enough. We've been living above it for 9 or 10 weeks, similar to the stock market, which is very interesting. In other words, the dollar index has been more or less behaving like the stock market, living above certain moving averages. A happy bull, so to speak, but anemic for the dollar. And right now, this week, if you close where you are now, you're going to break a structure on momentum. You can't see it on price that says, uh-oh, we're going to start back down again. Well, there's some mega numbers on the dollar, annual momentum breakage numbers.
In the world of precious metals, few indicators are as telling as the gold-silver ratio, a measure that has historically served as a beacon for discerning the relative value of these two assets. This ratio, which reflects the amount of silver required to purchase 1 ounce of gold, is more than just a numerical curiosity. It's a window into the market's soul, revealing insights about economic sentiment, investor behavior, and the intrinsic value of these metals. As we delve into the current state of the gold-silver ratio, we uncover a narrative of disparity, opportunity, and the potential for a significant market recalibration. Historically, the gold-silver ratio has fluctuated widely, influenced by a myriad of factors including supply and demand dynamics, geopolitical events, and shifts in investor sentiment. However, what remains constant is its ability to signal when one metal may be undervalued relative to the other. Currently, with the ratio hovering near historical highs, the market whispers a compelling argument. Silver is undervalued, perhaps significantly so, when measured against its historical relationship with gold. This isn't merely an academic observation. It's a clarion call to those with the foresight to see beyond the immediate horizon. The implications of a high gold-silver ratio extend far beyond simple comparative analysis. It suggests that silver, in its current state, represents a buying opportunity of potentially historic proportions. As history has shown us, periods of high ratio levels have often preceded significant rallies in silver prices, as the market seeks to restore balance and reflect the true relative values of these metals. Consider the economic and technological landscape that silver occupies today. Its industrial demand, driven by sectors as diverse as renewable energy, electronics, and medical technologies, continues to grow at an unprecedented pace. This demand, coupled with the finite nature of silver supply, sets the stage for a tightening market where the laws of economics dictate only one outcome: price appreciation. Moreover, the role of silver as a monetary asset cannot be overlooked. In times of economic uncertainty, investors have historically turned to precious metals as a hedge against inflation and currency devaluation. With central banks around the world engaging in unprecedented monetary expansion, the stage is set for a resurgence in silver's appeal as a store of value, further underpinning its potential for price growth. Yet the narrative of silver's undervaluation and its implications for future growth is not just a story of economics and market dynamics. It's a tale of opportunity, inviting investors to reconsider their allocation strategies and to recognize the potential that silver holds as both an industrial necessity and a financial asset. The high gold-silver ratio is not just a signal of disparity, but a beacon of opportunity, highlighting silver's potential to deliver outsized returns to those wise enough to heed its call. As we reflect on this analysis, we invite our viewers to engage with us. Do you see the current gold-silver ratio as an indicator of silver's undervalued status? How might this understanding shape your investment decisions in the context of broader market trends and economic indicators? In the grand scheme of investment strategies, recognizing and acting upon such opportunities can be the difference between ordinary and extraordinary returns. The story of silver, particularly in light of the gold-silver ratio, is a compelling chapter in the broader narrative of wealth creation and preservation. As we continue to explore the multifaceted role of silver in the global economy, let us keep in mind the lessons of the past, the realities of the present, and the possibilities of the future.
But now the miners, after the pullback from the 2020 rally high, where they surged much more than gold on a percent basis, they've come all the way back down and erased a good chunk of that move, not gone back to the bear lows in 2015. At that time, for instance, GDX was $14. It's trading right now around 26. So it's still, a little almost double where it was. But it's had a big pullback, 20 some odd point pullback, a huge percent over the last 3 years. So a lot of people are just pulling their hair out. This is garbage. It's no good. Well, some sectors, some stocks can go out of business because, well, aside from business malfunctions, but the nature of what they fabricate or what they deal in. You can maybe be a chip maker that the world no longer needs your kind of chips. You're gone, et cetera. But you're not going to, gold miners, unless they're there's speculative ones always, and there's some that go out of business just like in any industry. But basically, it's ground to theoretical zero right now. And I think some smart money is seeing that and starting to make the move. And not concerned they're going to make money this month, but probably they got a major low in a major market that's the most undervalued it's ever been relative to gold, relative to the S&P, relative to anything. And it isn't going to zero. And they're already taking the step. Now, there's other asset managers who haven't done it, but they've been listening. Druckenmiller did this. I wonder why he did that. Paul Singer did this. Well, why did he do that? And so they're thinking about it. It's got them thinking and doing some homework. And so what we argue, and we've argued since mid-December, that's when the Fed minutes came out. And the Fed basically said, we'll cut rates maybe next year, but we're not going to raise rates anymore. Okay, now I don't think that's changed really. There are few commentators have said maybe they'll raise rates. I don't think that's going to happen. And I don't think most people think it will. But the issue is, when will they cut rates? Well, maybe that doesn't matter. The point is, maybe it's already the Fed party is priced in. And if you look at an S&P chart starting in mid-December to the present, it's this. Look at a gold chart since then, it's that. It's down and then sideways. Silver's been down and then more down, not to lower lows, but more down than gold. Gold's been sideways. And the miners have been punished. And another market that's also moving with gold is T-bonds, price-wise. In other words, as gold has pulled back, this is true for the last year and a half, actually. The bond market's been fairly well synced with gold, not with the stock market anymore. And I'm suspecting that you get enough wobble in the stock market, especially due to this NVIDIA bubble, possibly being pierced at some point, then some of this money is going to flow somewhere. And I think a lot of people are going to move into the gold miners because of the reasons I explained. And it's such a tiny little sector that we've described it to be like a wet bar of soap being grabbed. And I think you got to be aware of that. So if you're thinking in terms of an investor, not a trader, you got to be looking at the gold miners. Gold's behaving quite well. Miners aren't. Is that going to continue forever? No. So think about it. A couple big guys have, and a lot more of them will once the stock market starts to wobble. Do we think we're near a wobble point? Yes. If we see that today's high holds where it was in the S&P and the NASDAQ, we're near the end of the month now. There's 4 more days left before the month ends. And if we don't extend monthly momentum beyond where it's already been with today's high, which is the high of the month in price, it did not take out the momentum high of last month. So when you look at a monthly momentum chart of the S&P or the NASDAQ 100, instead of seeing strong December, strong January, strong February, you see a strong December, a flat January, and a slightly declining February. So momentum is actually paused and built like a range at a high level. So it's overbought and it's stalled. All it's going to take next month, meaning starting Friday next week, is to downtick 1% or so in these indexes. And I'm going to start snapping the momentum lows we've seen in February and January and December. It won't take much. So what we need to see right now.
As we journey deeper into the labyrinth of investment opportunities that silver presents, it's crucial to anchor our insights in the solid ground of technical analysis. The charts and graphs that trace silver's price movements are not mere lines but narratives, telling tales of resilience, potential, and strategic positioning in the global economic theater. Today, we stand at a pivotal point where silver's technical indicators signal a confluence of opportunity ripe for the savvy investor's taking. Silver's technical landscape is a testament to its enduring appeal and resilience. The $22 level, a bastion of support that has historically held firm against market vicissitudes, underscores silver's robust foundation. This level isn't just a number, it's a reflection of investor sentiment, a bulwark against downward pressures, and a springboard for potential upward trajectories. The significance of this support level in the broader context of silver's price history cannot be overstated. It represents a collective acknowledgement of value, a threshold below which the market is reluctant to venture. Yet the narrative of silver's technical resilience extends beyond static support levels. The potential breakout above the $25.50 level is a clarion call to those attuned to the rhythms of the market. Such a breakout would not merely signify a temporary uptick, but could herald the beginning of a sustained rally, propelled by both technical momentum and the underlying economic drivers of demand. This prospect of a breakout, coupled with the strategic buy-on-the-dip approach adopted by many traders, paints a picture of a market teeming with latent energy, awaiting the catalyst that will unleash its full potential. Turning our gaze from the microcosm of technical analysis to the macroeconomic stage, we find additional forces at play that bolster the case for silver's ascent. The global push towards renewable energy and sustainable technologies has ignited unprecedented demand for silver, given its critical role in solar panels, electric vehicles, and other green innovations. This surge in industrial demand, juxtaposed against the backdrop of finite supply and challenging mining prospects, lays the groundwork for a tightening market dynamic poised for price appreciation. Moreover, the current economic climate, characterized by inflationary pressures and currency devaluation risks, further amplifies silver's appeal. As investors seek havens from the erosive effects of inflation, silver's dual identity as both an industrial commodity and a precious metal positions it uniquely as a versatile investment option. This duality not only enhances its appeal during times of economic uncertainty, but also provides a hedge against the unpredictable swings of the market. As we navigate through these technical and macroeconomic waters, a compelling picture emerges, one of opportunity, growth, and strategic advantage. The confluence of technical resilience, industrial demand, and macroeconomic trends creates a potent mix that underlines silver's readiness for a bullish future. But the journey doesn't end here. It's a continuous dialogue, a constant reassessment of opportunities and risks in the ever-evolving tapestry of the global economy. With this analysis in hand, we invite you, our viewers, to join the conversation. How do you interpret silver's technical indicators and their interplay with broader economic forces? In what ways do you see silver fitting into your investment strategy amidst the current economic landscape? In the grand arena of investment opportunities, silver shines not just as a metal but as a beacon for those seeking to navigate the complexities of the market with insight, strategy, and foresight. As we delve further into the myriad aspects of silver's investment thesis, let us remain vigilant, open to new insights, and ready to act on the opportunities that lie before us.
I've been one really for a long time. You could go back and find a few periods over the last 50 years where stock market was in a bull and so was gold, but generally gold led. Well, for example, gold was a bull from 2000 to 2008, and it had that nasty October, part of September and October. And then by March of the next year, while the stock market was making a new low again, March of 2009, below the October crash low of 2008, gold was back at its highs. It had been around $1,000. And then gold proceeded to double over the next, several years, 2009, 10, 11. So the next several years, it doubled from 1,000 to almost 2,000. At a point in there, after that March low in 2009, the stock market did, in fact, turn back up. And you could almost argue, well, the stock market's following gold. So it wasn't the other way around. Remember, gold's been around for thousands of years. And it's no matter what some people might like to say, it's not lost its intrinsic value as money. It's still regarded. You can jump from a plane and parachute in almost any country in the world and land. And I don't care if it's a civilized world or what you might call primitive. They know what gold is. OK, it's universal. And a lot of people are becoming aware of that again. Not so much in the U.S. government, but in a lot of other governments, for example, are buying the heck out of gold. We know that. And there's no doubt reasons for that. But anyway, no, the linkage is pathetic. It's coincident a few times in history, enough to burn it in people's memory. They're linked.
In the realm of investments, where uncertainty often clouds the path forward, silver shines as a beacon of potential and prudence. Through our detailed exploration, we've uncovered the multifaceted appeal of silver, from its indispensable industrial uses to its historical significance as a store of value. As we stand on the brink of economic shifts and technological advancements, silver's dual role positions it uniquely as an asset of both current necessity and future potential. The technical resilience of silver, underscored by its strong support levels and the potential for breakout, signals a robust foundation for growth. This technical analysis, coupled with the macroeconomic backdrop of increasing industrial demand amidst finite supply, paints a bullish scenario for silver's price trajectory. Furthermore, the strategic shifts in investor sentiment towards tangible assets, underscored by the actions of influential investors and a revaluation of portfolio diversification strategies, highlight a growing recognition of silver's value. The high gold-silver ratio, signaling silver's undervaluation, presents a compelling opportunity for those seeking not just to preserve, but to enhance their wealth. As we encapsulate our narrative, the conclusion is clear. Investing in silver is not merely a hedge against uncertainty, but a proactive step towards capitalizing on the opportunities that tomorrow's economy presents. Silver's ascent in the investment landscape is supported by a confluence of technical strength, economic fundamentals, and strategic market positioning. To those who have accompanied us on this journey, the path forward involves more than just recognition of silver's potential. It demands action. Consider the role of silver in your investment portfolio, not just as a diversification strategy, but as a forward-looking investment in the technologies and economic trends of the future. Let this exploration serve as a foundation for your investment decisions, a source of insight into the dynamic world of silver. As the global economy evolves, silver's role is poised to expand, offering opportunities for growth, stability, and innovation. In the ever-changing landscape of investments, let silver be your steadfast ally, a symbol of resilience and potential in a world brimming with challenges and opportunities. The journey of investing in silver is just beginning, and the horizon is bright with promise for those ready to embrace the potential of this timeless yet ever-relevant asset.
Well, everybody knows that the market is narrow, stock market. It's probably never had such narrow leadership in its history in terms of achieving a bull market peak. What percent of the stocks were leading it, and we're down to you can name them on one hand. Okay, and that's even narrowing, by the way. Apple and Microsoft are no longer playing the game like NVIDIA is. So NVIDIA is all that matters. That's all you need to know. Go long and be happy. Okay. Well, anyway, there's a lot of asset managers in the stock arena who have to be long stocks because they're going up. If you're not long stocks and part of the party, then you're underperforming your competitors. And so people will move money to the fund that's making more money away from the fund that's making less. So even if they don't like the stock market, fund managers have to be there. But a lot of them, and I don't know how many, but easily 50% of them are a bit nervous. They've been around long enough to know this stinks. It's too narrow. It's too bubbly. The kids in the street are screaming about it. Not the old guys, but the kids in the street are screaming about how the stock market's doing. So they know that they're probably in a dangerous position, and so they're probably ready to push the button and reallocate some assets. Especially out of tech, let's say, like Druckenmiller did a few weeks ago. He sold some big tech and moved into gold miners, Barrick and Newmont. Well, it turns out Just the other day, another one, guy named Paul Singer from Elliott Management, apparently has made the move as well. I don't know to what percent, but apparently enough to be noticeable in the press, into gold miners. And, people forget about the notion that I guess your granddad and your father knew about, and so many in your generation don't, that, buy cheap, don't buy high. Buy cheap, buy value, buy something that's not going to go to zero, that's as close to zero as it's going to get. That's the best place to be. And, you might be 6 months early or a year early or whatever. But now the miners, after the pullback from the 2020 rally high, where they surged much more than gold on a percent basis, they've come all the way back down and erased a good chunk of that move, not going back to the bear lows in 2015. At that time, for instance, GDX was $14. It's trading right now around 26. So it's still, a little almost double where it was. But it's had a big pullback, 20 some odd point pullback, a huge percent over the last.
In the intricate dance of investment and economic foresight, silver emerges not merely as a participant, but as a potential leader, guiding the way toward both stability and growth in an era defined by uncertainty. Our journey through the multifaceted world of silver investment has unveiled a compelling tableau, a metal poised at the nexus of historical value, industrial indispensability, and investment potential. As we stand at this crossroads, the convergence of technical strength, macroeconomic trends, and shifting investor sentiment heralds a new epoch for silver. The case for silver's ascent is underpinned by a confluence of factors that, when viewed collectively, paint a vivid picture of its potential. The resilience displayed by silver's technical indicators, particularly its robust support levels and the tantalizing prospect of a breakout, speaks volumes about its underlying strength. These technical signposts are not mere abstractions but tangible reflections of investor confidence and market sentiment, signaling silver's readiness to ascend in value. Moreover, the macroeconomic landscape provides a fertile ground for silver's growth. The unprecedented demand from burgeoning sectors such as renewable energy, electronics, and medical technologies underscores silver's irreplaceable role in the economy of tomorrow. This industrial demand, coupled with finite supply constraints, sets the stage for a tightening market dynamic that could propel silver prices to new heights. Yet, silver's appeal transcends its industrial utility, shining equally bright as a monetary asset. In times of inflationary pressures and currency devaluation, silver offers a haven, a storied store of value that has stood the test of time. The high gold-silver ratio, a beacon signaling silver's undervaluation, further enhances its allure to investors seeking not just safety but also significant growth potential. The strategic shifts among institutional and individual investors, a movement towards diversification in tangible assets, affirm silver's emerging prominence. Influential market players and a new generation of investors alike are recognizing the unique dual appeal of silver, positioning it as a cornerstone of a resilient and growth-oriented portfolio. As we encapsulate the insights drawn from our exploration, the narrative that emerges is clear and compelling. Silver, with its unparalleled industrial demand, historical role as a store of value, and current undervaluation, presents a rare convergence of opportunity. It stands as a beacon for investors navigating the tumultuous waters of today's financial markets, offering a path to both safeguard and grow their wealth. In the grand scheme of global investing, the ascent of silver represents more than just a shift in asset allocation. It signifies a broader revaluation of value, resilience, and growth potential in the 21st century. As we gaze into the future,
well, you talk about the insiders who sort of intimately know their own companies, and they know that while everybody's claiming, this is a great, we didn't even have a soft landing. It's so great, and they're looking at the world from the point of view of their own company, whether they're in the tech arena or they make metal fabrication or whatever, they're looking at reality through their lens of, what's the demand for their commodity, their product they produce or service. Is it really as strong as the stock market would imply, or is it more anemic? Is it more on the edge than the stock market would suggest? They see a reality that a lot of stock investors don't see. And a lot of these guys aren't economists. They're not out there looking at the macro economy. They're looking at the real world from their perspective. And so when they see their stock, perhaps what they consider to be a bit overpriced, they don't want to go down the loo if it goes down. They want to make sure they got enough money on the side where, their home's paid for, they can give money to their kids, that they're okay no matter what happens to their stock. And therefore that crosses their mind. I need to liquidate some of this. Jeff Bezos dumped a ton of it, Amazon, and he's not alone. And I don't know how you read that. It's a wet noodle indicator, because if you go back, this really got higher than what you said in terms of the number of exits that were signaled by these company folks. That it was like over the last month it got more intense. Even I think it's a record. My son Brett told me he thinks it's a record level of evacuation from companies by their owners. So, yeah, it says something, but, it's a wet noodle indicator because over those last month or so, stock market's still gone up. So it's not something it's not a pinpointer, but I think it's a good background indicator. At MSA, we don't look at that. I mean, we notice it. We try to put blindfolds on because we call that a wet noodle. We want something that when it breaks, probably, you're going to get a consequence pretty soon, if not immediately. And usually that's a momentum structure, not a price chart. Technical, but a momentum's technical, and therefore quite often we're ahead of the price chart turns in terms of anticipating the turn, whether it's a bottom or a top. And right now I'm seeing enough evidence to say if you're long stocks, you better start getting antsy here. You better pay close attention because it's not what it appears like. And we'll see. But I think over the next week or so we're going to get some evidence that will validate what I'm saying. And if it does, of course, it'll be in our reports. We'll be pounding the table.
In the grand tapestry of investment opportunities, where myriad assets vie for attention against a backdrop of economic volatility and uncertainty, silver emerges not merely as an option, but as a clarion call to those in pursuit of both preservation and growth. The journey we have embarked upon has illuminated the multifaceted appeal of this venerable metal, revealing not just its historical significance, but its paramount role in the future of investing. As we stand at the threshold of what many perceive as a paradigm shift in the global economy, marked by technological advancements and geopolitical shifts, the case for silver becomes not just compelling but imperative. The forces that have shaped its ascent, a combination of industrial indispensability, monetary heritage, and strategic investment appeal, converge to position silver uniquely amidst the spectrum of investment choices. The industrial demand for silver, fueled by its critical role in emerging technologies such as renewable energy, electronics, and medical applications, underscores a fundamental truth. Silver is not just a commodity, but a cornerstone of the future economy. This demand, set against the backdrop of finite supply and challenging extraction prospects, creates a supply-demand dynamic poised for significant price appreciation. Furthermore, silver's storied role as a monetary asset, a bastion against inflation and currency devaluation, has never been more relevant. In an era where fiscal and monetary policies have ventured into uncharted territories, silver offers a hedge, a form of financial insurance that harks back to its historical roots while being firmly anchored in contemporary realities. The compelling narrative of silver's undervaluation, as highlighted by the gold-silver ratio, adds another layer to its appeal. This metric, a harbinger of potential market recalibrations, suggests that silver is not just an asset for the present, but a strategic bet on the future. A future where its value is recognized and reasserted in the financial lexicon of both individual and institutional investors. As we encapsulate the insights and analyses that have punctuated our exploration, the conclusion is unmistakable. Silver stands on the cusp of a renaissance, a period of revaluation and recognition that could see it ascend to new heights of investment prominence. This is not a speculative foray into the unknown, but a strategic alignment with the fundamental shifts shaping our world. To those who have journeyed with us through this exploration, the message is clear. Silver represents a unique amalgamation of opportunity, resilience, and growth potential. It is a call to action for investors looking to diversify their portfolios, to hedge against the uncertainties of our times, and to invest in an asset that bridges the past, present, and future. As we conclude this narrative, let us not view it as an end but as a beginning, a starting point for further exploration, discussion, and engagement with the dynamic world of silver investing. The ascent of silver is not merely a prediction but a possibility, grounded in the tangible realities of market dynamics, economic trends, and the unyielding quest for assets that offer more than just returns. They offer a vision of the future, one where growth, stability, and innovation converge. In the unfolding saga of the financial markets, silver's chapter is yet to reach its zenith. For those wise to its call, the journey is just beginning. Embrace the opportunity, consider the potential, and let silver be a beacon guiding your investment strategy towards a horizon brimming with promise.
Higher.
Yeah, especially things like, NVIDIA, okay, or advanced micro devices, or et cetera. That's what they're looking at. In fact, if you look at most sectors of the market, they're not near the 2022 highs. Most sectors within the market are not. They're trying to, but they're not close. So the S&P is extremely narrow. So is the Nasdaq 100, especially with front-end loaded symbols, like a half a dozen of them. And even those symbols, if you look at Apple and Microsoft has wobbled real hard over the last few weeks, and Apple can't seem to get off the floor at 180. And we think 180 is a kill number if you close a week there. So two of the big leader symbols that used to be leaders are suddenly now anemic as heck. And we're now getting down to, one or two stocks. And people, for some reason, are blind to it. So when that comes undone, and we've already seen evidence of it in the momentum, and what prices, momentum was with price in October, November, December of last year during the first part of the surge, but especially when we got into January, late December, early January, momentum started to fade in terms of it didn't go up anymore. Price continued up. Momentum said, And there's structure below on momentum. If you see a price chart of the S&P now and try to draw lines under it, it's like upward curve. You can hardly draw a trend line with at least 3 points establishing the line. You can't do it. You look at the momentum chart, you see a floor from, I won't use the word. You've got a floor underneath you that's so clear that if you were looking at momentum right now, you say, oh, goodness gracious. That's terrible looking. So, and I think that floor will be exploited as a breakout point, and probably early next month.
Now, you're saying that will be a breakout point early next month. When do you expect this move then in precious metals? And what about the move for gold versus silver when we see this?
I think the silver-gold spread will shift. In fact, you've seen that anytime you see a surge that lasts, let's say, a month or so in the monetary metals, generally silver will beat gold. And similarly, when gold pauses or pulls back a little bit, silver will beat gold on the downside. So it's a wild child. And the same is true with the gold miners. There have been points in time, especially that spring to summer 2020, when gold went up, 40%, and they went up triple, So they're slingshot type markets, silver and the miners especially now. And I think the biggest slingshot I've ever seen, possibly in my entire career, which goes back to the mid-'70s, is what the miners are set up for right now. And I think there's some big guys out there who may not be looking at charts like I am, momentum charts especially, but realize just on a fundamental basis that this is a place to be. Nobody wants.
An era marked by rapid technological advancement and geopolitical uncertainty, the investment landscape is undergoing a profound transformation. The once clear-cut boundaries between traditional and alternative investments are blurring, prompting investors to seek out assets that offer not only financial returns, but also resilience against market volatility. Silver, with its storied past and indispensable role in modern industry, is emerging as a beacon for those navigating these shifting sands. As we delve into the current dynamics of investor sentiment, a key trend emerges, a discerning shift towards precious metals, with silver taking center stage. This movement is not arbitrary but rooted in a strategic reassessment of value, risk, and potential in a world where the only constant is change. The narrow leadership in the stock market, characterized by an over-reliance on a handful of tech giants, has catalyzed a revaluation of investment portfolios. The pursuit of diversification, a time-honored strategy to mitigate risk, has led savvy investors to consider silver not just as a hedge, but as a cornerstone of a balanced and forward-looking investment approach. The actions of influential investors and asset managers further illuminate this shift. Figures such as Dr. Michael Burry and Paul Singer, known for their astute market predictions and investment strategies, have publicly acknowledged their moves into precious metals, signaling a broader trend among institutional investors. Their interest in gold miners, and by extension, the precious metals sector, underscores a growing recognition of the intrinsic value and potential of assets like silver. This is not merely a flight to safety in turbulent times, but a strategic positioning for future growth. Moreover, the interplay between the US dollar index and gold prices, while traditionally seen as an inverse relationship, offers nuanced insights into silver's potential. As the dollar faces pressure from expansive monetary policies and geopolitical tensions, precious metals, including silver, stand to benefit. However, silver's appeal extends beyond its correlation with currency movements. Its industrial demand, particularly in sectors poised for exponential growth, such as renewable energy and technology, positions it uniquely as an asset with dual drivers of value: its traditional role as a store of wealth and its burgeoning importance in the global economy. The growing interest in silver is also mirrored in the retail investment sphere, where a new generation of investors, armed with access to unprecedented levels of information and tools, are exploring the merits of precious metals. The democratization of investing, facilitated by digital platforms, has broadened the base of investors who view silver not only as a portfolio diversifier, but also as a key player in the green technology revolution. As we observe these shifts in investment patterns, a compelling narrative unfolds. Silver, once overshadowed by its more illustrious counterpart gold, is now recognized for its multifaceted value proposition. The convergence of economic, technological, and societal factors is crafting a new chapter in silver's history, one where its potential to deliver outsized returns and serve as a bulwark against uncertainty is increasingly acknowledged. This evolving landscape invites us to ponder the future of investing and the role of assets like silver within it. As market dynamics shift and new challenges emerge, the question becomes not if, but how silver will play a pivotal role in the portfolios of those looking to navigate the complexities of the modern financial world. We invite you to join this conversation to share your perspectives on silver's place in the evolving investment paradigm. How do you perceive the changing dynamics of the market and the role of precious metals within it? As we stand on the cusp of potentially transformative shifts in the economy and technology, silver's journey from the shadows into the spotlight offers a fascinating lens through which to view the future of investing.